Good day, I am Maribel Garcia. I'm going to discuss the part 1 of Module 12. Module 12, Accounting and Payroll in the Medical Office. Introduction to Healthcare Accounting. Presentation Objectives. Purpose of presentation. To give participants a better understanding of healthcare accounting and the issues facing healthcare audit committees. These concepts will enable participants to first, understand the complexity of healthcare industry and accounting. Second, gain an understanding of the numerous areas impacting healthcare accounting. Third, explain the factors that influences gross and net income. And lastly, be aware of the top accounting issues audit committee will be facing in the coming year. Healthcare accounting. Healthcare accounting is under healthcare industry. So what is healthcare industry? It's a highly complex environment. It is also referred to as the medical industry. This industry provides preventive, remedial, and therapeutic services to patients. So what is healthcare accounting? It is a complex branch of the healthcare company's financial management. Involves all four elements of financial management: the planning, controlling, organizing, directing, and decision making. So why healthcare accounting is important? First, it monitors expenses. It ensures adherence to internal controls, ensures the tax-exempt status of a healthcare business. Healthcare accounting professionals. They are the one who gather, analyze, and interpret financial data. They maintain financial reports, balance sheets, cash flow analysis, and other records for healthcare organizations like insurance companies and hospitals or medical offices. Unlike the traditional accounting firm, like in a corporate setting where profit is the top priority, in healthcare accounting, without this, the organization could not deliver patient care, employ medical staff, or run their healthcare facilities in a cost-effective manner. So next, audit committee's responsibility. Audit committees are responsible of overseeing the financial reporting and disclosure process, monitoring choice of accounting policies and principles. These are the oversight of the following. First, organization's financial reporting process and internal control over financial reporting, ICFR. Independent auditors. Organization's internal auditors. Organization's compliance with legal and regulatory requirements. Risk management. Protect assets and provide proper financial oversight. ICFR refers to the controls specifically designed to address risk related to financial reporting. Independent auditors is the auditors develops an opinion asserting the reliability and fairness of the financial statement. Organization internal auditors, they are the one who deals with issues that are fundamentally important to the survival and prosperity of healthcare organization. So what is unique about healthcare accounting? It includes the following. First, gross and net revenue or accounts receivable reserves. Capital intensive business. Investment valuation tax exempt debt. Other areas of estimate and judgment, include the following: professional liability, self-insurance liabilities, third-party settlements, pension liability, regulatory reserves. Gross and net revenue or the accounts receivable reserves is healthcare need to have amount account receivables reserves. AR reserves involve setting aside cash in the bank. Capital-intensive business. In healthcare, it is needed to consider various factors. It includes non-payment, the patient's disease, and service quality. Professional liability is the risk that someone could get sued for causing damages to another person as a result of their work. It only includes damages that occur as a result of a person's work. This is the illustration of the healthcare industry players. It includes the providers, insurers or payers, drug supply medical device manufacturer, employers, government, regulator and payer, employees, and at the center it is the patient. Patients are typically citizens, voters, and sometimes taxpayers. Patients are less complicated than payers and providers. Providers, they are the one to provide the health services to patients and maintain health information about them. Healthcare balance sheet assets. Assets are what you have. More is better. It includes the following: economic resources that are expected to provide future benefits, such as increasing cash inflows or reducing cash outflows. Current is realizable in less than a year. Long term is greater than a year. Cash and investment are valued at market. Inventory and property, one valued at historic cost. Property is depreciated over life of asset. And last, pledges and receivables are discounted to present value and what we expect to collect. Next is the healthcare balance sheet, the liabilities. Liabilities are what you owe. Less is better. It includes the following: economic obligations to outsider or claims against asset. Payables are current, due within 1 year. Relate to obligations we have in normal course business. These are the account payable, payroll, employment taxes, and benefits. PTO liability is paid time of accrual for time of earned but not taken, and long-term debt is paid over more than a year. Next is the healthcare balance sheet net asset. Net assets is equal to assets less liabilities. More is better. Unrestricted are those items that have no donor-imposed restriction. Next is the temporary restricted. Donor restricted by time or use are those items that were received with a donor-imposed restriction that will be satisfied in the future. And next, permanently restricted. Donor restricted for principal. Earnings used for donor-intended purposes. These are the items that are received with a donor-imposed restriction that states that the donation must be maintained permanently. 2018. This includes the two. First is the without donor restriction and with donor restriction. So this is the example of healthcare balance sheet. As you can see at the bottom, there is a included new ASU 2016014 2018. So based on what I've searched, new ASU 2016014 2018, it is the new issued accounting standard update. ASU are intended to improve financial statement presentations. Among other provisions, ASU 2016 to 14 reduces the number of classes of net assets from 3 to 2, requires the presentation of expenses in both natural and functional classification. So, next is the healthcare statement of operation. Revenue. Where does it come from and how do we get more? It includes the following. First is the gross and net revenue, includes the hospital inpatient, outpatient, clinic, and specialty services. Other operating revenue includes the parking ramp, joint ventures, cafeteria, etc. Expenses. Where does it go and how we spend less? This includes the salaries and benefits with a 64%, supplies and drugs with a 12%, purchase services with the 8%, and others 16%. Next is the healthcare statement of changes in net assets. It includes the following. First, unrestricted contributions recognized immediately in unrestricted fund. Unrestricted contributions are funds or other assets given to a nonprofit entity with no restriction on their use. Temporarily restricted contributions are those items that were received with a donor-imposed restriction. It is not recognized in unrestricted fund with a restriction is released, time or use. Permanently restricted contributions, not recognized in unrestricted fund, only earnings. Those received with a donor-imposed restriction that states the donation must be maintained permanently. 2018. It includes the following, as I said earlier. These are the two: without donor restriction, recognized immediately; with donor restriction, not recognized in fund; without donor restrictions, under the restriction is released. So here is the example of statement of operations. Next is the gross and net revenue. Healthcare industry nuances. What healthcare changes is different from what is paid. Typically, two parties who each pay a portion of the total payment. First is the insurer, who pays a negotiated legislated rate to provider. The patient, who pays a co-pays, co-insure, and/or deductibles. Market evolution. Historically minimal patient responsibility for healthcare services. This includes the patient insulated from cost of healthcare, confidential negotiated rates with health insurer. So what is consumer-directed care? It allows you to see how your home care funding is being spent through your personal budget with a monthly income and expenses statement. Includes the two of these. Result in increased patients' engagement. Patients and insurer or employer expectations driving industry transparency. Gross and net revenue. Gross revenue. Aggregation of the following: what we charge, what we bill to third-party payers or patients. Synonyms for charge. For hospital, it is the price, clinic, fee schedule. Charge transaction came from charge master. Charge master captures the cost of each procedures, services, supply, prescription drug, and diagnostic test provided at the hospital, as well as any fees associated with services such as equipment fees and room charges. And next is the change or the fee schedule. Net revenue, aggregation of what we collect or receive in payment from third-party payers and/or patients. This includes the following: net revenue calculation, the gross revenue, the charity care. Charity care refers to healthcare that is provided for free, reduced cost to eligible patients with no expectation that the patient will pay. Uninsured care. In healthcare, it means that you have to pay for your service and that you do not have a coverage for the hospital services by a third party like Medicare or often other insurance companies. Discounts, the payer or government, bad debts, uncollectible. That's all with my report. Thank you for listening.